Welcome to the Business Career College online continuing education series. My name is Colin Johnson, and today I'm going to be leading you through a course called Fintrac and Reporting Obligations. In this course, we're going to review what Fintrac is, what sort of reporting obligations they have, and why it's important for you as a professional in the industry to be aware of those obligations and why you need to follow them. Fintrac is the Financial Transactions and Reports Analysis Centre of Canada. As that's quite a mouthful and quite a long sentence, it's consistently referred to as Fintrac throughout their documentation, as well as documentation that you'll see elsewhere, perhaps even within your own organization referring to them. So we'll call them Fintrac throughout this course. They're authorized under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. That's a law passed by the federal government which empowers Fintrac to do some financial investigation and analysis. Now, what that act is set up to authorize them to do is it's creating a mandate that they're facilitating the detection, prevention, and deterrence of money laundering and the financing of terrorist activities while ensuring protection of personal information that's under its control. So it is important that they're doing the first two things that are referred to in that mandate. So that is the work around money laundering and the financing of terrorist activities. So really they're there to help prevent financial crime or misuse of funds. But it is also very important that they're protecting the information that's under their control. We will speak a little bit about that further on in this course, and we'll speak in detail about their role in terms of preventing financial crime from happening. Let's start off our course by looking at the types of agencies that report to Fintrac. Now, when we talk about Fintrac reporting, the people that have to report are called reporting entities. And you'll see that repeated as we look more specifically at some of the legislation that's out there. But let's take a look at what some of the reporting entities are. So under Fintrac, financial entities or banks are a reporting entity. Any agency that's registered under Part 1 or Part 2 of the Bank Act is actually considered a financial entity, so this would also apply to credit unions and Caisse Populaire. The second, which we're going to spend more time on later in this presentation because it's most relevant to our audience here, is life insurance companies, brokers, and agents. Also of some interest are securities teams. They'll have requirements under Fintrac for reporting. Money service businesses also have reporting responsibilities under Fintrac. So that's payday lenders or check cashing agencies and those sorts of businesses. Agents of the Crown that sell money orders, so for example, a Canada Post outlet that sells a money order has some reporting requirements. Accountants and accounting firms have reporting requirements. So do real estate brokers, salespeople, and developers. Casinos have some specific requirements. Dealers in precious metals and stones will also have reporting requirements. That's because they, and real estate brokers, will engage in transactions that are at a high value, so it's likely that they'll deal with large amounts of money. Public notaries also have some reporting requirements. And then anyone that's an employee of any of the above types of agencies may likely have reporting requirements under Fintrac. We're going to take some time now to look at the type of information that gets reported to Fintrac by reporting entities. So again, a reporting entity is one of those groups required to report under Fintrac. So the first type of transaction that we're going to talk about is a suspicious transaction. So this is a more general area. that's talking about the nature of the transaction that's happening. Then we'll talk about large cash transactions. We'll follow that up by talking about electronic funds transfers. That's one of the more recent additions to the data that Fintrac collects. Then we'll talk about casino disbursements. That's specifically going to relate to casinos' Fintrac requirements. Then we'll talk about terrorist property and the requirements around that. Now, when we look at these 5 areas of reporting, 3 of them, large cash transactions, electronic funds transfers, and casino disbursements, are very technical in terms of what it is that has to be reported to Fintrac. And then when we look at the other 2 areas, suspicious transaction and terrorist property, it's a little more general in terms of the nature of what you're going to be reporting, but there are still definitely firm types of things that you do have to report. When we look specifically at suspicious transactions as a category of reporting for Fintrac, we're looking at this category as transactions where the reporting entity, that's you or the organization that you work for, suspects that there's reasonable grounds linking the transaction that's happening to money laundering or terrorist financing. Now, that's a pretty broad statement, but this is the broadest category under Fintrac reporting that we're going to look at. Because it's such a broad category, it is the category that nearly every Fintrac reporting entity has to report on. And in some ways, because it's so broad, that makes it one of the more one of the categories where it's easier to collect information because you're not looking for a specific transaction. There isn't a single indicator of what this is going to look like because it's about behaviors that are unusual for this client or something that's unusual for your business. So because you have an ongoing relationship with your clients, you're going to know things that are unusual for them. So if you have a client who always does very small transactions with you or a certain type of transaction with you, and suddenly they're doing a number of very large transactions, or they're purchasing a policy that's very different from anything they've asked for in the past, that might be unusual. You'd want to follow up with them and ask some probing questions to see why this change is happening. Or if you, in your business, for example, sell a certain kind of policy almost exclusively, and suddenly you're getting a large number of requests for a different type of policy that's unusual for you, or an amount that's unusually high for you, that again might be considered an unusual transaction or a suspicious transaction for your business. So it would be important to probe and collect information and make sure that you're reporting that onwards. When we look at a large cash transaction, we're looking at one of those more specific transactional types of behavior that need to be reported to Fintrac. So this is based around 2 ideas, so that it's a large transaction and that it's a cash transaction. So really, it could be a few different things that you're looking for when you're looking for a large cash transaction. So anytime there's a single cash transaction from a client that's $10,000 or more, that's something that you're going to need to report to Fintrac through the reporting mechanisms that we'll talk about a little bit later in this presentation. But also you want to be aware of multiple transactions by the same client. So if you get multiple cash transactions with a client in a single 24-hour period, and those total $10,000 or more, that also needs to be reported back to Fintrac. So we're focused on the large, that's over $10,000, and cash, something done in cash rather than by another monetary instrument. Now, there are a couple of exceptions to this rule when we're looking at cash transactions. So if you're receiving a large cash transaction from a financial entity, so that's a bank or a credit union, then that is exempt from Fintrac reporting. Or if you're receiving the funds from a public body, so a provincial or federal government or a department of the provincial or federal government, a municipal body like the city government or a department of theirs, or a hospital authority, so that's the foundation that pays the expenses of a hospital. Those are some situations where Fintrac has said that there's an exception to the reporting for a large cash transaction. Now, this only applies to the large cash transactions, so make sure that you're only applying this exception here. Those would also be unusual situations in a lot of cases, so it's probably not something you're going to come across too terribly often, but those are the exceptions Fintrac has listed in their documentation. The next category of transaction that we're going to consider is an electronic funds transfer. As electronic funds transfers became more heavily used, they became regulated by Fintrac. So January 1st, 2015, Fintrac put regulations in place around electronic funds transfers. So much like a large cash transaction, we're still looking at that $10,000 amount when we're looking at electronic funds transfer. So that could be one electronic funds transfer of $10,000 or more, or it could be a number of electronic funds transfers in a single day that add up to $10,000 or more. There are two kinds of fund transfers that are categorized by Fintrac. The first is a SWIFT transfer. A SWIFT transfer is a specific kind of transfer that banks use to move monies across borders. And then they speak generally about electronic funds transfers. So as we see the rise of the ability to send money electronically in larger amounts, we've seen this to become more important. The key difference between a large cash transaction and electronic funds transfer is two things. This one is electronic, and whereas a large cash transfer was any kind of cash over $10,000, electronic funds transfers are only concerned with money moving into Canada or out of Canada. So if you start a funds transfer in Canada and send it to the US or somewhere else outside of Canada, it would be subject to Fintrac. Or if you receive money from another country by electronic transfer, it would be subject to Fintrac. It's also important to note that when electronic funds transfers are reported, they're also reported to the Canada Revenue Agency as a single report that goes to both agencies. Canada Revenue uses this to help them investigate cases of tax evasion. So rather than collecting the information twice and sending it in two separate reports, these agencies have engaged in collective reporting. Let's look at a real-world example in Canada of the Fintrac violation that we've seen in recent history. So in 2014, Fintrac completed an audit of the records of a Canadian-based bank, and what they found is 1,174 unreported wire transfers of $10,000 or more. So this investigation actually started around a client of the bank who was being investigated for financial crimes in the United States, and there were wire transfers going from this bank to the United States as well. As the investigation deepened and the audit continued, eventually Fintrac found that large number of 1,174 wire transfers that weren't reported. When the bank responded to this inquiry, essentially what their claim was that the lack of reporting was due to a different interpretation of the regulations. Now, my piece of advice here would be when you're looking at your company's internal regulations, it's always important to go back to what you know from Fintrac itself. Because when you look at wire transfers, if they're going out of the country, and if they're more than $10,000, the regulation is quite clear. So there shouldn't be a lot of room for interpretation. And it's when you engage in interpretation that you actually could start to get yourself in trouble. Now, this bank did receive numerous fines, and originally at the end of the investigation, Fintrac did opt not to publish the name of the bank. Casino disbursements, as we said earlier, are specific reporting requirements for casinos. So what a disbursement is providing funds. So when a casino provides funds in the amount of $10,000 or more in a single transaction or in multiple transactions with the same client in the same day, it needs to be reported to Fintrac. So this is very similar to the large cash transaction rule and the electronic funds transfer rule, but it's being applied specifically to a casino. Now, this is not a cash-only disbursement. It can be paid by other methods such as check, and it would still apply, but it is restricted based on what the money is being paid for. So what they've restricted it to is disbursements specifically related to gambling, so redemption of slot tickets, chips, tokens, and that sort of thing. Also advances on markers and placement of bets, slot jackpots, those are all things that have to be reported, but also payments to clients or advances on any sort of other form of financial instrument, as well as credit advances. So if at a casino you're paying out a large credit card advance or several large ones that total more than $10,000, then that's going to be something that needs to be reported through Fintrac. Again, just like other types of large transactions, we are going to focus either on a single transaction that's more than $10,000, but also multiple transactions that taken together add up to $10,000 in the same day by the same client or patron. Another type of tracking that's required under Fintrac of any reporting entity is around terrorist property. This one is not specific around a dollar amount, it's specific around a concept. Again, this is one of the more general types of reporting, so it is required of most of the reporting entities to report terrorist property. So what this is any time you receive or make a transfer, do a transaction of property, so that's anything that's owned, including currency, and you believe that that property belongs to a terrorist or a terrorist group or a listed person, then you have requirements to report. So this came into place June 23rd, 2008, that this reporting has to happen. So a terrorist or a terrorist group is anyone that lists one of their purposes as carrying on terrorist activity, but it also includes anyone on a list published in the regulations establishing a list of entities under the criminal code. Now, a listed person is any individual whose name is published in the regulations implementing the United Nations Resolutions on the Suppression of Terrorism under the United Nations Act. That means that it's believed they've carried out or tried to carry out terrorist activity, or that they're controlled or under the direction of an individual or a group that's carrying out terrorist activities. Now, a terrorist group or a listed person can be one person. It can also be a corporation or a group. It's a blanket term that applies to a terrorist organization. Now, we'll provide some resources on your course page linking you to where you could find names of listed persons for your convenience. An additional area where Fintrac requires some reporting is around what are called politically exposed persons. So a politically exposed person is a person who has a prominent position in either government or in an international organization. And by prominent position, what we're referring to is the ability to influence high-level decisions or control the organization or the country, and also to control resources, specifically financially valuable resources for that organization or that government. Now, the reason that Fintrac is interested in reporting around these politically exposed persons is to help control or curb corruption, because there has been a lot of corruption encountered by the Financial Action Task Force, one of the United Nations agencies that's working against corruption. Specifically under Fintrac, we are concerned about politically exposed persons from other countries, or foreign politically exposed persons, as they often call them. They'll sometimes use the acronym PEP for a politically exposed person, just to make it a little easier to communicate in writing. But we'll try to use the entire phrase when we're talking about politically exposed persons in this presentation. There are specific reporting requirements around politically exposed persons for life insurance, and we'll get into those shortly. But many of the reporting entities do have reporting requirements around politically exposed persons. The second part of Fintrac's mandate, when we looked at it, was the protection of personal information as greatly as possible. So when we're looking at Fintrac reporting, privacy legislation will apply during the collection of the information. Now, if you're working in a provincially regulated private sector business, you're likely going to be subject to PIPEDA. Now, if you do want further detail on PIPEDA, we do have an entire presentation on privacy legislation that we offer through our online learning, so I encourage you to take a look at that. But there is a major exception when we're looking at privacy legislation and talk about Fintrac. So that major exception is that you don't need to inform your customer or your client that you're using their information to report to Fintrac. In fact, in some of the documentation, you'll see that they would encourage you not to, because you don't want to encourage clients to engage in behaviors that are going to help them avoid reporting to Fintrac, because that can be potentially problematic for you. So you may be collecting the information as part of your normal client intake process. You would let the clients know that's why you're collecting it, but you, again, would not have to tell them that you're collecting and sending the information to Fintrac as well. That is your business's responsibility under Fintrac's framework, and part of that framework is that there is no need to inform the customer that you're using their information to report to Fintrac, because that's a legal obligation. Taking a look specifically at the Fintrac requirements for people in the life insurance industry, we see a few things that we want to take note of. In terms of the reporting requirements in the life insurance industry, there's only 3 reporting requirements that you are held up to. So the first is suspicious transactions. So as we said before, you're going to be required to report when there are reasonable grounds to suspect that a transaction or an attempted transaction is related to the commission or attempted commission of money laundering or terrorist activity. The second one is looking at terrorist property. So again, if you believe that there is property in your possession or control that's owned by or on behalf of a terrorist or a terrorist organization, that needs to be reported through Fintrac as well. And the third type of reporting is for large cash transactions. So again, specifically, that's looking at transactions over $10,000 or a combination of transactions over $10,000 that are done in cash. And it would likely be unusual for you to handle more than $10,000 in cash in your business. In addition to this, insurance companies have record-keeping requirements around large cash transactions, their client records, their corporate records, and the records of ownership of the policies. The company also has to have procedures or processes in place for determining the identities of their clients. So this is specifically to help you with the 3 reporting requirements. So you'll need to know the identity of the client when you report to Fintrac if there's a suspicious transaction, a large cash transaction, or a report about terrorist property. There is some specific guidelines around politically exposed foreign persons with the life insurance industry. These specifics in this case are if you are receiving a lump sum payment of $100,000 or more from an individual for an annuity or a life insurance policy, you have to take reasonable steps to determine if that money is coming from a politically exposed foreign person. The final piece that we're going to talk about in regards to a life insurance company is the idea of a third-party determination. So when you do have a large cash transaction recorded, you have to make reasonable attempts to determine whether that money is coming directly from the client you're dealing with, or if you believe that money is coming from a third party. Let's move into how you're going to report to Fintrac when you've determined that there's a requirement to report. So we're going to talk generally about the systems that are used to report to Fintrac. Within your own organization, there's likely a specific process or procedure that you're going to follow. So it would be good to double check with your compliance department of exactly how they do this reporting. Fintrac primarily accepts reporting electronically over the internet. If your business does have an internet connection, you are required to report electronically. The only businesses that are allowed to report through a paper form are those businesses that do not have any sort of internet connection. Those paper forms are available through Fintrac directly, but again, they're only going to accept them from businesses that do not have an internet connection. We're going to focus specifically on the electronic requirements, as the majority of you will not have an opportunity to report on paper. So there are 3 online reporting options. The first is directly through their F2R system. The second is through a batch system. And the third is through service provider agreements. All 3 of these reporting methods use the F2R system in some way, and we'll talk about that in some detail in a moment, but there are significant differences to them. The F2R system is generally for your small to medium-sized organizations, and then the batch and service provider systems are probably going to be for larger organizations. The batch system specifically is a way to report large volumes of transactions. All of the information on how to set up reporting for Fintrac is available on Fintrac's website. The F2R system is the main system that in any of the 3 methods of reporting you're going to use in one way or another. We'll talk about it first for that reason. It is a secure application, so there's web security around this, that can be accessed over the internet. It allows you to file the reports that you're required to file as a reporting entity through the tool. There's no cost to use the tool because it is a required tool that most reporting entities are going to need to use. And it has 3 main functions. So the first function is to manually submit reports. So it's the tool that you would use likely if you're a smaller organization directly to report any reporting that's necessary as under your entity's regulations. You use it to manage the location and contact information that would be included on the report, so who you are and where you are. And then the third function is about delegating reporting to a service provider. So if you do choose that service provider option, you would use this tool to do that as well. The sign up for the F2R system is relatively simple. You can sign up either by phone or through email. They want to make it as simple as possible to encourage as many reporting agencies to report as easily as they possibly can, and to not make this a barrier. There are very basic browser requirements. Most browsers will support the tool, and it does require the use of JavaScript. If you're a larger reporting entity, you may want to consider using the batch system for your reporting to Fintrac. So what a batch system is it's a system that allows you to submit multiple reports or multiple corrections in one batch or at one time. So it is a significantly more involved process than the F2R system. You do have to have an F2R account to be able to do batch reporting. But there are multiple steps to consider when you're setting up the batch reporting. So you have to register for your F2R account, and then you would have to apply for a certificate to be able to do batch reporting. Once you've gotten that certificate, then you or someone at your organization has to install the software that's going to be used on the individual computers that will be doing the reporting. And then once you have that software installed, you have to complete the certification process by submitting some information through the batch system. Given that there is another piece of technology involved here, software that's installed, generally this would be recommended, as I said, for a larger organization, but also an organization that has the technology personnel in place to manage this batch system and to do the installations, and to look at any errors that are happening with the system. I do want to note that you will still need an F2R account when you're doing this, and you may be able to make some of your corrections directly through that system, even if you submit it in a batch. But other than setting up your system using F2R, your reporting is expected to go through the batch system if that's how you've signed up to submit your reports. When we look at a service provider agreement, this is another option for reporting to Fintrac, where really you're outsourcing your reporting to someone else. So you and the people that work in your company would collect the information that needs to be reported to Fintrac, just as you would under any other system of reporting. And then that information would be sent to another organization who inputs that information into the F2R system on behalf of you as a reporting entity. So there would likely be some cost associated with this, but you would be saving a significant amount, potentially a significant amount of data entry, depending how many reports that you're filing on a regular basis. So if you are a smaller organization who doesn't tend to file very many reports, it may be advantageous to you to handle the reports yourself. But if you are a mid-sized organization where you don't feel you're large enough to use the batch system, this may be an option for you. So this is only handling the actual submission of the reports through F2R. You still have to manage your F2R account for a couple of reasons. You will manage your location itself, so any changes to reporting personnel or the address and so on. And also you manage the authorization that you've given to the service provider through F2R so that they can do the reports on your behalf. If you don't do those things, you're not meeting your obligations under Fintrac, and if you don't authorize the service provider through F2R, they're not going to be able to do any reporting for you. At the end of the day, you still are accountable for making sure all the reporting is done, regardless of which of the methods you're using for your reporting. We've spent a significant amount of time talking about the mandatory reporting requirements under Fintrac, but there are a few types of voluntary reporting that can be done under Fintrac's mandate. So as they're voluntary reporting, you wouldn't be required to do these. This would be optional, and it's going to become fairly clear why it would be optional. But generally speaking, the two types of reporting are suspicion of money laundering about the financing of terrorist activities. That's likely going to apply when you're not acting on behalf of a reporting entity. And suspicions about non-compliance with the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. So these are the two types of voluntary reporting that Fintrac accepts, and we'll go through both of them in detail in a moment here. So looking at the first voluntary reporting that's available with Fintrac, this is when you suspect that a transaction you observed involves money laundering or the financing of terrorist activities. So this is exactly like the mandatory reporting requirement that we've been reviewing. It just applies when you don't work in an agency or in an industry that is regulated by Fintrac. So if you see a suspicious activity while you're out in public yourself and you want to report it because you think it falls under one of the categories we talked about, or if you observe it in your workplace and you're not a Fintrac regulated workplace, so if you do work in retail of some form, maybe a car dealership, and you observe a large cash transaction that seems a little off for you and you want to report it, you can. So in that case, you wouldn't have a reporting account like we talked about that you can report it through. So you would contact Fintrac directly through their website. They have a portal where you fill in all of the information you would need to report. But it is important, if you're going to do this, to make sure you're collecting as much information as you can about the situation. Because it's not required reporting, and because of the information that's required, we don't tend to see a huge amount of reporting here. But once Fintrac has that information, they will do their best to look into the situation specifically and see if there's any further investigation that they need to do on this specific issue. The second kind of voluntary reporting to Fintrac is more of a whistleblower type of reporting, or reporting about reporting entities. So if you think that a reporting entity isn't doing their Fintrac reporting correctly, you can report them to Fintrac by fax or by mail. Those are the only ways that they will accept this kind of reporting. Their information is kept up to date on their website, which will be posted in the resources inside your course. And then once Fintrac has your information of what you're reporting to them, they will determine if there's a violation when they investigate the complaint. So once you've reported that you think there's incorrect reporting to Fintrac, you don't have to worry about continuing the investigation. They will complete that investigation. So some examples of where you may see that is if you are in a bank and you see a large cash transaction and you don't think that it's being reported, or if you're in another location and you're seeing that happening, you could contact Fintrac by fax or mail to let them know that you think this agency isn't reporting. Even though reporting under Fintrac is going to be beneficial to society as a whole by preventing financial crime, Fintrac does have some tools at their disposal to apply penalties for non-compliance with the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. Generally speaking, there are two types of penalties. There are criminal penalties, so those are penalties under the Criminal Code of Canada and that are administered that way, and there are administrative money penalties. Both of those kind of penalties do exist, but they can't be issued against the same instances of non-compliance. So if there is a situation where you're non-compliant with the Proceeds of Crime, Money Laundering, and Terrorist Financing Act, and you're assessed an administrative money penalty, you could consider that that is likely resolved, and it would not be reasonable for you to then expect to also suffer a criminal penalty. Ideally, we don't want any penalties, but I am going to go through them in both types of penalties in some detail so that you have a realistic expectation of what those penalties can look like and what you could expect if there is a situation of non-compliance. Criminal penalties for violation of Fintrac's regulations and for violations of the Act that it's incorporated under do exist. Because they're criminal penalties, Fintrac has the authority to disclose cases of non-compliance to law enforcement. Specifically, this is intended to be used when there's extensive non-compliance. So the criminal penalties that we will look at can include if you fail to report suspicious transactions, anywhere up to a $2 million fine or 5 years in jail. When we're looking at large cash transactions or electronic funds transfers, you can be looking at anywhere from $500,000 to $1 million for offenses against that. If you're not meeting your record-keeping requirements, those penalties could be up to $500,000 or 5 years in jail. And when we're looking at failing to provide assistance or information during a compliance examination, so when Fintrac is looking at resolving an investigation, there are penalties again up to $500,000 or 5 years imprisonment. If you are disclosing the fact that a suspicious transaction report was made or disclosing the contents of the report with the intent to impact a criminal investigation, you can actually be sent to jail for 2 years for that. So that links back to when we were talking about privacy. It's in your best interest not to disclose at all that you're filing reports to Fintrac, because it could be interpreted that you're trying to interfere with the reporting by letting the person that you're reporting about know that you're reporting. These, again, are typically for very serious issues of non-compliance, but they do exist, so it is good to be aware of these penalties. Realizing that the compliance process is not necessarily about punishment, but it's also about improvement in compliance of the agencies. In 2008, Fintrac was given authority to issue administrative money penalties for non-compliant reporting entities as an alternative to the criminal penalties that do exist. So the penalties are based on 3 factors. They look at the harm that was caused by the non-compliance. They look at the history of the organization, and they look at the non-punitive nature of this kind of penalty. So again, this type of penalty is more in line with less serious compliance issues or less serious infractions, because when they look at the nature of the harm and your history, that's where they're going to determine whether, first of all, whether an administrative money penalty is appropriate, or if they should be looking at a criminal penalty. Once they decide on an administrative money penalty, that compliance history and harm caused is also going to determine the amount of the fine. So these fines can be anywhere as high as $100,000 to an individual who's in violation of Fintrac's regulations, or as much as $500,000 to an entity or a corporation. When we look at the non-punitive nature of the penalty, That's where they're looking at things like the size of the organization and the type of infraction it is, and whether a large financial penalty is going to actually incentivize and make an incentive for that business to be compliant in the future, or if the penalty is so large that it will just cause the business no longer to exist. The intent of the administrative money penalty is not to put organizations out of business, but to show them the value of compliance. I wanted to finish off the course with you by providing you with some best practices or some ideas for some best practices that can help you be compliant and easily have the information at hand that you'll need to do your reporting to Fintrac. So I broke it down into 4 categories of what you can do. The first is really just applying something you should already be doing with your clients. So completing your Know Your Client requirements and using that information is going to be one of the best practices we explore. The second is going to look at building a compliance system. The third would be attaching meaning to that compliance system, or really getting people to buy into it. And then the final part is going to be about making ongoing learning a part of your culture. I think that if you apply some or all of these 4 best practice areas, you will be able to see really strong improvement in your compliance with the Fintrac requirements, because when it comes down to it, if people understand and believe in the requirements that they're tracking, it shouldn't be too terribly difficult to make sure that you're always reporting properly. And we really do want to find as many ways as possible that we can avoid those penalties that we've talked about. When we look specifically at the Know Your Customer or KYC requirements, completing those requirements is going to help you out in your Fintrac reporting. So when you complete a KYC analysis with a customer, as over time you complete many of them, you're going to know what's normal behavior for your client, what your client's normal situation is, what type of activity is going to be normal. And even if it's only your first time completing this assessment with your client, you're going to get a good idea of who they are and how they behave in your industry. So using that information, it'll specifically help you identify what might be a suspicious transaction, so something that's unusual for them. It's going to help you determine if any money you receive from them could be coming from a third party. So it'll help you outline whether it makes sense that suddenly this client has $10,000 in cash that they want to apply towards something they're purchasing from you. It's going to help you with your requirements around politically exposed foreign persons, because you're going to get to know more about your client and you'll get to know about their linkages to those individuals. And then it's going to help you with the specific life insurance requirement to verify your client's identity and make sure that it is, in fact, the person you're talking to is who they're saying they are. So by using a tool that's already in place for other regulatory reasons, you can apply this to help you meet your to help you meet your requirements under Fintrac as well. I like to think as much as possible that following these requirements is as much about more smartly applying what you're already doing than starting a whole bunch of new things. When we look at building a compliance system, what we're really talking about is making the Fintrac reporting part of your regular business. So if you do things the same way, the same time, in all of your interactions, it's going to become normal for you to do that, and if you miss a step, it's going to feel like something's not right. So one of the first parts in doing that would be to create a form or a set of notes or a spreadsheet that reminds you what reporting is required in the F2R system. You're not going to have that system pulled up when you're talking to a client, so you're going to need to have notes of what you need to know. Once you have that form, another good step you can take in building a compliance system is making someone responsible to make sure that everyone is doing their Fintrac reporting. And when someone's responsible, they can go around and issue reminders and help people out with their reporting if they need help with it. Even if one person is responsible, it's important when you have a compliance system to hold everyone accountable. So that person that's responsible for the compliance may review the day of various staff that are reporting under them to see what kind of business they did in that day. And as they're doing that, they may say, oh, did you think that this might be a suspicious transaction under Fintrac? Oh, I see you did a big transaction over $10,000. Did you report that? And all of those types of things are going to help to make this an integrated system that's more successful. Specifically, if you put this sort of compliance system in place, it's going to help you report to Fintrac accurately through the F2R system. So you'll get it right the first time and you won't have to make corrections. It'll get your reports in on time within the window that Fintrac has. And because there are record-keeping requirements for life insurance companies under Fintrac, it will help you keep those accurate records as well. Once you have a system of compliance in place, a way to make that more successful is to turn that into a culture of compliance or build on that and create a culture of compliance. This is the part that's really about attaching a meaning to compliance as to why you do it, to get more people on board, and maybe even to get yourself fully on board. So when you're attaching that meaning, what you're really reinforcing is what's the impact of non-compliance. So you can focus on the financial impact. So you could look at the penalties, both criminal and administrative, that we talked about earlier. That's one way that you can help solidify why it's important. But the non-financial impacts of it are just as important. So one non-financial impact is this compliance system is encouraging us to get to know our clients better so we can know what's unusual for them. And when we know what's unusual for them, we're protecting them from being victims of money laundering, from perhaps inadvertently assisting terrorists or financing terrorists. And more generally, some of the non-financial benefit is by participating in Fintrac's reporting, you are impacting financial crime across the country and making it a safer place financially for you and your clients and your family to work in. So when you combine all of those values with the tools that Fintrac has to make sure everyone's in compliance, it makes it easier for people to get on board with a culture of compliance and really believe in why it's important that we do this Fintrac reporting. An additional best practice that you could adopt to make following Fintrac's regulations and reporting easier for you and your colleagues would be ongoing education. So when you require ongoing learning that incorporates Fintrac, it's always going to be at the front of everyone's mind. So this could be something like a major annual review of all of the regulations of Fintrac. I would encourage that as well, so that point by point people are going through the kinds of things they have to report. It could also be smaller learnings about Fintrac or an aspect of Fintrac throughout the year. So you may each month have a topic under Fintrac that you look at, or each quarter, and get people really engaged in learning about that and making Fintrac something that's always at the front of their mind so that they always understand why it's important, and exactly what they have to do. When you're looking at the learning that you're doing, you want to do what I call bringing that learning into their world. So in this course, we looked specifically at the regulations in life insurance because that helps bring it into your world. Another way we can do that is by using specific examples, either created ones that you talk about with your colleagues or real-world examples where non-compliance happened, so that you can break down the situation and take a look at it and maybe identify where things went wrong. This could be a situation from within your own organization, if there is one. Hopefully there isn't a non-compliant situation, but that's always a great learning. Or you could look to the local or provincial or national news and see if there's examples out there of non-compliance with Fintrac that you can use as a teaching tool as well. By looking at things that are happening in the real world, that's a great way to engage people in the learning and make them understand that mistakes can happen and there are errors, but there's always a way to try to minimize those and help for better compliance. Wrapping up this lesson, I wanted to do a brief review of what we talked about. So we talked about what Fintrac is and who has to report to Fintrac or who is a reporting entity. We also talked about the specific kinds of reporting that are required under Fintrac, and we did go through that in some detail. We looked at the exceptions to reporting that exist, and then specifically what kind of reporting in the life insurance industry is required. We then talked about how you would report to Fintrac and a little bit about how you would set up that reporting mechanism. We talked about the voluntary reporting you can do under Fintrac, so if you're not in a regulated industry, or if you think a reporting entity isn't reporting properly. We then moved in to talk a little bit about the penalties for not complying with Fintrac's regulations. So once you've completed viewing this course and completed the quizzes that are associated with it and passed those quizzes, you'll be issued your continuing education certificate within 2 business days. But I'll also point you back to the site where you launched the course from, because we'll maintain a set of additional resources at that point. So, for example, we'll have some links there with some information about Fintrac, the link to Fintrac itself, and other specific areas that you may be interested in. I hope you enjoyed the course and enjoy your ongoing learning.